We are joined by Mr. Ajay Patil. He's the CFO of Cummins India, and the chart is in front of you. The numbers that came in a couple of days ago haven't been very well taken in by the market for two or three reasons. One was weak exports. Let's discuss this, Mr. Patil, in detail. What went wrong as far as the exports were concerned, and do you see any kind of recoup or reversal of trend that was there in the first quarter in the coming 2 or 3 quarters as far as exports is concerned, sir?
Hi, good morning to all of you, and thank you for having me on the call. I think the reason for exports, as we stated on the earnings call, is twofold. One, what we have seen, and if you bring in the context of how the exports have been over the last 6 to 8 quarters, you would have seen sequentially the exports have been growing up consistently. Second is that from a end market perspective, we have seen to some extent a softening of demand in few end markets, notably in Middle East, Africa, Europe. And the third thing is, to some degree, an inventory rebalancing is what we expect to be occurring in the channel, thereby impacting the quarterly number, but which are coming out flat if you look at the read from a year-on-year perspective. So overall, what we expect from a revenue perspective, this is not specific to export per se, but the overall revenue guidance that we are given for the year is that we expect us to be growing at the rate which is 2x of GDP. And obviously, if we have to deliver on that, we have to find a way to grow our exports as well.
Okay.
Mr. Patil, the numbers are flashing in front of us. It's been a fantastic performance that has come in both on the top line as well as bottom line. Yet the markets are disappointed. There's been a very, very sharp sell-off. Your margins have risen. There's been a sharp uptick on top line as well as the bottom line. What do you think is the market misreading in the numbers?
I mean, as you would imagine, I mean, hard for me to say what the market is doing with respect to the price. Obviously, in our conversation on the earnings call, we provided a broader detailed commentary with respect to where do we see our business shaping out to be, where do we see the growth opportunities are. And importantly, we also reflected that in the guidance that was given for the year. Hard to say what the market is reacting to, but from our perspective, all we can say is that our domestic revenue have been pretty robust in terms of how they have grown year on year, sequentially as well. No doubt there was an element of pre-buy in it as the CPCB 4 plus norms become effective July 1st. So an anticipated pre-buy occurred in the previous quarter. And number two, now that the Central Pollution Control Board has clarified that we can continue to have CPCB 2, which was the previous version of emissions. Those engines can be sold up until June of 2024. We do expect, to some extent, the revenue mix playing out between CPCB 2 and 4 for the rest of the year. But overall, we feel quite optimistic with respect to the end markets, our core end markets of infra, data center, commercial realty, healthcare, hospitality. We see demand holding up quite well, and that's a reflection into the guidance as well.
Okay, absolutely. Good morning, Mr. Patil. Tanya this side from Business Today. The company mentioned in its call about the double-digit growth guidance for FY24. So can you elaborate on that, and if you could, quantify that number for us?
Yeah, certainly. I mean, it's hard for us to pinpoint a number to say that it is going to be an X number of revenue growth. But what we started to think about is in a context of where our end markets and how they are performing. So as I said in my previous comment also, I mean, the end market for us, whether it is infra, data center, rental, commercial real estate, healthcare, hospitality, we see the demand holding up, number one. Number two, when you see it from a macros point of view, if the forecasted GDP for India, and we can take the estimate that we want to believe in, but could be ranging from anything from 6.25 to 7 percentage point, and add the extent of inflation in the economy, we definitely would like to outperform that from our growth point of view. And we feel quite optimistic and positive that the extent of visibility that we have, as well as the momentum that we are seeing in the order position, and dovetailing that with the macros, give us the confidence of saying that we'll have a growth of which is 2x of GDP.
Mr. Patil, Cummins India is, of course, a very well-known genset maker, and it has been, how should I say, the flag bearer of the rally that we are now seeing in the infrastructure space. If you see your own monthly stock price, and my apologies, I come back to it again and again because that is where lies the story. From a low of about 200 rupees in the depth of the COVID pandemic to a high of about 1700 rupees, you've pretty much redefined the capex-led rally that's come into the Indian economy. Would you like to sort of maybe look a little ahead, 18 months to 24 months time, and give our audience and investors a flavor of how do you see the broader capex cycle working in India?
No, certainly we feel quite optimistic given the fact that over the past 3-4 years and even before, the emphasis of the government with respect to upgrading the infrastructure has been fairly consistent. Budget after budget, we have seen greater allocations being made to the core infra. In fact, last budget, there was a highest allocation to railways as an example. Then you take the actual matrix on ground, which is with respect to how much of highway construction happening per month. That has been fairly consistent between 25 to 30 kilometers per day of construction. Third thing is, with the rebound that occurred post-COVID from a consumption perspective, which also meant that the capacity utilizations in the broader manufacturing sector, that was, reached to a level where the confidence came in to say, can we start to see a private capex cycle coming in? Based on the read that I have across different reports and different information that we receive, multiple sectors we are seeing that the private capex has kicked in. What we are seeing, though, is that there may not be a big ticket announcement with respect to the private capex, but at a small to medium scale, capex, I think, is happening across a broad spectrum of industries, is what we see. So, in summary, when you combine the emphasis of the government and the public capex, which has been, happening year after year, and combine that with what's happening on the private capex in a broad spectrum of industries, together is where we see that this momentum will sustain. There could be multiple growth factors, though. I mean, one sector may grow faster than the other, but from a medium to long-term perspective, we certainly believe that the private and public capex story will play out, given the aspiration of the government. I mean, if India has to become a 5 or a 7 or a 10 trillion economy, it is going to be a sustained amount of investments into a broad spectrum of industries is needed. And that gives us the optimism. Our products go into a wide range of end markets, and therefore we feel quite optimistic with respect to how the medium to long-term outlook is.
Okay, absolutely, Mr. Patil. Two quick questions. So, are there any specific supply chain challenges that the company is facing at this point in time? And also, if we look at the margins, the company witnessed a sharp 160 basis points on decline in margins, EBITDA margins, on a sequential basis. So, what really, led to this, and what is the outlook going forward, if you talk about margins?
No, certainly. So, talking first about the supply chain, I think the supply chain issue that we are currently handling is very specific to a certain range of engines, and that too for a certain specific electronic components, which are currently in short supply. What we see, though, is a sequential improvement which is happening with the supply allocations that we continue to receive. So therefore, as we go into the future periods, we do anticipate to progressively have improvement from a supply chain point of view. Number two, you talked about margin on a sequential basis. I think we said that on the earnings call with fair amount of detail was, in the quarter four, we had some one-time gain reflected, and that kind of bumped up the margin for Q4 of 22-23 fiscal. If I take those away and normalize it and compare to the quarter one operating profit, we actually see a good, I would say a modest expansion of about, say, 55 to 60 basis points. So therefore, a sequential comparison has some one-off. That's how I would summarize it.
Mr. Patil, your global CEO, Ms. Jennifer Ramsey, is in India and is, of course, meeting government officials across the spectrum, whether it is the foreign minister, Mr. Jaishankar, or officials in North Bloc. What are the kind of feelers that you are getting from the government when it comes to the infra space? Is there a specific project in mind that globally Cummins is looking to outsource from India?
No specific information per se. I think with respect to our engagement with the government is primarily to really look at on the structural policy side and in what manner we can communicate as to what Cummins can do as India sort of look at its aspiration to become a 5, 7, 10 trillion economy in the next 5 to 10 years.
Okay, absolutely, Dr. Patil, on that wonderful note, thank you so much for sharing these, wonderful insights with us and being with us here on Business Today Television, and all the very best for the coming quarters as well.
If you like the video, do like, comment, share and subscribe.